So after variation of will, the new topic is IHT on trust. Already we discussed the income tax implication on trust. So today I will discuss how to pay the inheritance tax on trust and how CGT will apply on trust. So IHT and CGT implication on trust we are discussing now. First, what are the tax IHT implication, inheritance tax implication on trust? So you can see here IHT on trust. From IHT perspective, trust is divided in following two treatments. Number one, settled property trust, SPT treatment, not in the scope of our syllabus. This is not a part of our syllabus. And relevant property trust, RPT treatment, is in our syllabus. And first, SPT treatment, which is not part of our syllabus, it is related to IIP trust, interest in possession trust. And RPT, relevant property trust treatment, is which is our part of syllabus, is related to discretionary trust. So we will discuss the RPT treatment, and according to RPT treatment, you can see the relevant property trust RPT heading. According to this treatment, all assets belong to trust. And second point, donation. Donation means gift to trust is called chargeable lifetime transfer, CLT. And already you knew that when you make CLT, you will pay lifetime tax on CLT, and that tax you can also pay if donor die within 7 years of making this CLT, making this gift. So whenever you will give to trust, what are the IHT implication? Donation or gift to trust is in IHT point of view, it is CLT, and we will pay the lifetime tax, and also that tax apply if you will die within 7 years of making the CLT. That's it. And second heading is extraction from trust. Mean you are one day when you extract the assets from trust, then what are the IHT implications? So there are 2 points. 6% exit charge is payable on the value of assets extracted. So whenever you will extract the asset from trust, 6% exit charge. This is IHT tax. 6% exit charge you have to pay on the value of asset which you extract. And second, after every 10 year, principal charge of 6% is payable by trust on total assets. So, how to pay the IHT when you extract the assets? 6% exit charge you will pay. This is IHT tax. And after every 10th year, you will pay also the 6% principal charge. So 6% principal charge always payable on 10th year, every 10th year. And one day when you extract the assets, you have to pay 6% exit charge. So that's it. There are 2 points here. Gift to trust is CLT, and extraction from trust exit charge you have to pay. This is IHT tax. And automatically after every 10th year, 6% principal charge on total value of assets. That's it. These are IHT implications. Now the next is how to pay the CGT on trust. In here you can see whenever you donate to trust or extract from trust, donation, give to trust, or extraction the asset from trust, in both cases it is called gift. And on normal you have to pay normal CGT on gift, DP minus cost gain. However, do note following points. First, if transaction is immediately charged to IHT, then gift relief is available. Obviously, I already told you when you give to trust, this is in IHT point of view, it is CLT, and CLT is immediately chargeable to IHT. That's why in CGT, in capital gain tax, your gain will be deferred through gift relief. Gift relief is available because the condition of gift relief is met because this is CLT. That's why in CGT, gift relief available and donor can defer his gain and transfer to donee. So gift relief available, main point. Second, no CGT is charged on death and assets are transferred at market value, very important. mean when you transfer the assets at the time of your death. Death means death estate. In IHT point of view, it is called death estate. So in death estate, there is no CGT, only IHT applicable. So whenever you will give the asset in death estate, that time gift, no CGT is payable, CGT exempt. Only CGT is applicable on lifetime gifts on PET and CLT. And asset is transferred at market value. You can see this example. For example, Mr. A, he died and all the asset transferred to Mr. B. So Mr. A will never pay any CGT, no gain, no loss. And for example, his DP disposal proceed. For example, he left the asset value 100,000. So DP minus cost, there is no gain, no loss because CGT is exempt for him, and he will transfer these assets at market value. And for this DP, market value will become the cost of Mr. B, Dhoni. Same market value become the cost of Mr. B. So, this market value at the time of Mr. A death is called probate value. Probate value mean market value at the time of death. And this probate value is Mr. A donor's DP and Mr. B donee's cost. Now, whenever in future Mr. B will sell this asset to Mr. C, he will use the DP at the time of market value. This time market value we will use here, deduct this 1 lakh cost, and the gain arise, and he will pay CGT on it. So the point is, when you transfer the asset at death, no CGT exempt, and asset will be transferred at market value, and for Mr. B this market value become the cost. That's it. Next topic is CGT treatment for trust. One time in your exam scenario, examiner asked whether trust will pay the CGT. Yes, trust will pay the CGT, and for trust, whenever trust sells something, trust will pay the CGT, and annual exemption available to trust is, you can say, our individual's annual exemption is right now 12,300. 12,300 is normal. We individual will get the annual exemption, but trust, our individual in annual exemption is 12,300. So divided by 2, make the half. So please make it 6150, not 5850. Now it is changed, 6150. So annual exemption which is available to trust is our half, individual's half annual exemption. So 12,300 our individual's annual exemption, we make it half divided by 2. So 6150 annual exemption available to trust. And second point, trust are taxed at 20% for CGT purpose. Mean trust always pay the CGT at high rate 20% in basic, higher, additional, any band. So that's it. That is the topic of CGT and IHT implication on trust. Now the next topic is associated transfer or associated operation rule. What is this? It is mentioned to avoid tax, assets were gifted in pieces, as normally value of complete asset is greater than sum of value of each part of asset individually. Mean, for example, today you are gifting me mobile phone, but today you will give me only battery. When you gift me only battery, battery has less value. It is cheap. So today you are gifting me only battery. After some days you are gifting me cover of the mobile phone. So cover has also less value. So instead of gifting me whole mobile, you are gifting me this mobile phone in parts. Why? Because you want to reduce the market value of this asset to avoid the tax. But HMRC will never bear this, and HMRC will accumulate battery, cover, everything, accumulate all the asset, mobile phone, and total value. They will charge the tax on total value of the mobile phone. So that's why it is called accumulation principle rule. Associated operation mean whole value of asset tax together, not on parts. So next first point, you can see there are 2 points here. If asset is gifted in parts, then HMRC will accumulate all the gifts. Accumulate mean combined value of asset tax together and the whole value of asset tax together. But second point, they will give you some privilege. They will check the gap. But if the gap between each transfer mean gift is 2 year or more, then accumulation will not apply. I mean, for example, obviously HMRC will see the intention of taxpayer. For example, I am gifting you mobile phone. Today I am gifting you battery. After 5 years, I am gifting you the cover. This is a huge long time period. So obviously I am not, here is not my intention to avoid tax, because after 5 year I am giving you the other part. If I will give you battery now and after some days I will give you the cover phone cover, then HMRC will think, why not you are gifting together, why you are gifting in parts? Maybe your intention is to avoid the tax. That's why they will see, they will check that if the gap is 2 year or more, then it's okay. They will not accumulate. They will apply the tax on separate market value, separate parts market value. So for example, if you are gifting me car, today you are gifting me doors of the car. After 3 years, you are gifting me engine of motor car. After 5 years you are gifting me, for example, uh, you can say other parts of the car, you can say, or seats of the car. So you can see actually the gap between each gift is more than 2 years, then HMRC will never combine this whole, never accumulate the whole value. They will separately value, they will tax separate value, mean on door separate value, engine separate, other parts separate value, they will charge the tax. So that is the main concept of associated operation rule or associated transfer. That's it. Now the next topic is transfer of nil rate band. You know, normal 3,25,000 nil rate band available. So I am talking about normal 3,25,000 nil rate band. So here, if you can see, if one spouse dies without utilizing his full nil rate band, then his unused percentage of NRB can be transferred to other spouse for death tax purpose. Mean, for example, today husband died, and after 10 years wife died. Then wife can use her husband's nil rate band, percentage of nil rate band at the time of her death. So, you know, the residence nil rate band, which are only available on death estate. Okay. But this nil rate band, which is 3,25,000 normal for the tax year 2021, this nil rate band is available the second, when the second spouse died, the second spouse will use at the time of his death or her death, when they calculate the death tax on pet and CLT, mean on lifetime gifts, when you calculate the death tax on lifetime gifts, or when you calculate the death tax on death estate. So on both this normal nil rate band, the second spouse at the time of his death, when he or she calculate the death tax on patent CLT, they can use the first spouse nil rate band. And also at the time when they calculate the death estate, they will use he or she will use the husband or the first spouse who died, they will use the first spouse unused nil rate band at the time of death estate, and they calculate the tax at death estate. So residence nil rate band only available on death estate, but normal nil rate band, they will be transferred to other spouse, and other spouse at the time of death, they will use the first spouse nil rate band, unused nil rate band at the time of their death, when they calculate the death tax on patent CLT and death tax on death estate both. So this is the difference. So now please write down a question. For example, question is Mr. A died in January 2004 having death estate of 600,000, of which he gifted 5,60,000 estate to his wife. And you know, when you give to wife, there is no IHT. It means total death estate is 600,000, out of which 560 exempt, and the remaining chargeable death estate is obviously 40,000. Next paragraph. Now, Mrs. A died in January 2014 having death estate of 900,000. Now her total death estate is 900, which she gifted to her son. And you know, son is chargeable party, so all the death estate is chargeable. Now requirement is calculate the IHT of Mrs. A. And when you calculate the IHT of Mrs. A, now firstly you have to think the first Mr. A, her spouse died in 2004, so she can use the unused nil red band of Mr. A at the time of her death when she calculate the lifetime, sorry, death tax on patent CLT, and when she calculate the death tax on death estate both. Now firstly she will make a working of to check unused percentage of nil rate band NRB of Mr. A, her husband, spouse. So firstly check Mr. A unused NRB. So total death estate of Mr. A is 600,000. Let's give to exempt party 5,60,000. So chargeable death estate of Mr. A is 40,000. Now check the nil rate band of Mr. A, and he died in January 04. 0304 is the tax year, and assume from the table you can see, and right now I am assuming it is 2,55,000, but you can check from the list. IHT nil rate band list will be given in the exam. So total nil rate band for this tax year is 255, and how much is used? 40,000. So what is unused nil rate band of Mr. A and RB of Mr. A? 2,15,000. Now we need percentage of unused NRB. So unused percentage is 2,15,000 unused divided by total 255,000 into 100. So unused percentage of nil rate band is 84%. Now Mrs. A will use this husband's percentage at the time of her death. And in the question, you have to calculate IHT of Mrs. A. And in this question, there is no lifetime gift patent CLT, only death estate is available for Mrs. A. So total death estate of Mrs. A is 900,000, and all she is giving to her son. So all the death estate is chargeable death estate. Now check the nil rate band availability at the time of death year. She died in 2013-14. So this year, tax year nil rate band is 325,000. Now she can use here plus unused percentage of spouse. How she will use the percentage? Her nil rate band 325. On her nil rate band, apply the 84% spouse Mr. A's percentage of unused NRB. So this is 273,000. Now add, and total nil rate band at the time of death is 598,000. Right? Now you will deduct less last 7 years chargeable transfer. And from death date, because you are calculating the death tax, so from gift date means death date, you will go back and see whether any patent CLT is within 7 years of this death date. There is no patent CLT within 7 years of death. So it means available NRB is 598,000. Now pay the tax on death estate. Total death estate is 900,000, out of which 598,000 cover in the nil rate band, zero tax, and remaining 302,000 at the rate of 40%, 120,800. So this is the death death tax on death estate. That's it. That is the concept of transferring of nil rate band to the other spouse. Okay, now the next topic is reduced rate of IHT. Reduced rate of IHT is available only on death estate, not on patent CLT. You know, normal rate for death estate is 40%. But if reduced rate of IHT available, then you will pay, the reduced rate is 36% available on the death estate instead of 40%. Obviously, this is a relief, and whenever tax department will give you any relief, they will impose condition. And condition is 10% of net chargeable death estate should be donated to charity. Now, what is net chargeable death estate? Normally, what is the pro forma of death estate? You can see here: assets less liabilities less funeral expense, then total death estate you will get, and then less gift to exempt party, and then you will get the chargeable death estate. Now, what is net chargeable death estate? Chargeable death estate, add charity less available NRB. So less available NRB, and then you will get the net chargeable death estate. So if you will donate 10% of this net chargeable death estate to charity, then you will qualify for the reduced rate of IHT. Now please write down a question on it. For example, question is, Mr. A has a death estate of 700,000, out of which he gave, next line, to wife 50,000, charity 35,000, and rest to his son. Next paragraph, Mr. A has a pet potentially exempt transfer lifetime gift of 200,000 in 2010. In 2010, and he died in, next paragraph, Mr. A died in 2015. So, you know, this pet become chargeable at the time of death because you make this pet in 2010 and you are dying within 7 years of this gift. So death tax will apply on the pet. Your requirement is firstly calculate the IHT on the death estate and then advise how much he should donate to charity to qualify for the reduced rate of IHT. So firstly, you have to calculate the death estate. In this question, death estate, total death estate is 700,000 less give to exempt party. In this question, wife is exempt party, no IHT, 50,000 deduct, and charity is also exempt party and he is donating 35,000 to charity. So what is chargeable death estate? 6,15,000. Okay, now check the NRB availability at death year: 325,000, 15, 16, and less last 7 years chargeable transfer. From obviously gift date, you have to go back from gift date, and gift date is death date because you are calculating the death estate, death tax on death estate. So when you go back from death date, that is within 7 years of death, so that is chargeable obviously at the time of death, so it is chargeable transfer. So what is available NRB remaining? 1,25,000. Now, total death is chargeable death estate is 6,15,000, out of which 125,000 covered in the nil rate band, zero tax, and the remaining 4,90,000 at the rate of 40%. 1,96,000 you will pay tax on death estate. But if you will pay 10% of net chargeable death estate to charity, then you will qualify for the reduced rate, and instead of 40%, you will pay 36% tax. So now you will check the net chargeable death estate, and formula is chargeable death estate, which is in this question 615,000. Add charity. What is charity in the question? 35,000. And less available NRB, which is 125,000 in the question. So what is net chargeable? Net chargeable death estate 525,000. If you will pay 10% of this amount to charity, mean 525,000, then you will qualify for the reduced rate of IHT. But actually, how much you are donating to charity? Actually, to charity, actual donation to charity is in this question 35,000. So how much additional now you have to donate? Additional donation to charity, difference of these two amounts. So 17,500 additional if you donate to charity, then you will qualify for the reduced rate. So advice is he should donate to charity additional or further 17,500 to qualify for a reduced rate 36%. So now you have to calculate same death estate performer you have to make, but now charity you have to make 52,500 instead of 35,000. So same question repeat, but charity amount you have to change. So total death estate, again I am writing down the full question same, 700,000 less give to exempt party. In this question, wife 50,000, and now charity, how much we have to write down here to qualify for reduced rate? 52,500 instead of 35,000. Now chargeable death estate is 597,500. Now check the available NRB, and in this question same previous NRB already we calculated 1,25,000. Now calculate the tax on death estate 597,500, out of which 125,000 covered in the nil rate band, zero tax, and remaining 472. I think this one is 472,500. You can check at the rate of 36%. Now reduced rate available, so it is 170,100. Now tell me in previous option how much you will paying the tax, previous tax 196,000, and in this option how much you are paying now, how much tax you are paying? 170,100. So it means how much IHT you saved? IHT saved it to 25,900. But you know the additional donation, obviously you are donating from your pocket, so this is your expense 17,500 to charity. So deduct it, and how much net benefit you will get? The difference 8,400. So that's the concept of reduced rate of IHT. Okay, so Now the next topic is quick succession relief, QSR. So quick succession relief is if multiple donors die within 5 years, then QSR will be available as or because IHT will be charged multiple times on same asset with short span of time. Means, for example, here grandfather died, and all the asset transferred to our father. So IHT at the rate of 40% will apply at the time of his death. And now if within 5 years father die and all the asset transferred to his son, so again IHT on the same estate will apply at the rate of 40%. So within 5 years on the same estate IHT 40-40 apply. That's why quick succession relief available. And how much quick succession relief available? Formula is QSR, quick succession relief, is equal to IHT paid by donor. For example, in the example, grandfather has total death estate 1,000. And at the time of his death, 40% death tax apply, so 400 IHT paid, and the remaining 600 value transferred to father. So now quick succession relief formula we have to do according to this example. So IHT paid by donor, in this example 400, divided by value of asset 1000, and into value received, how much father is receiving? 600, and into quick succession relief percentage, you can see the table below. How much QSR percentage you will get? There are two columns. If second death is within 0 to 1 year, 100% available. 1 to 2 year 80%, 2 to 3 year 60%, 3 to 4 year 40, 4 to 5 20%, and 5 above 0%. So in my question, father is dying, for example, within 2 years, or you can say within 2 years, then how much? 80%. So you can multiply it with 80% and the answer you will get. That is the concept of quick succession relief. You can also write down an example on it. For example, question: Mr. A died in January 2014, having death estate of 900,000, on which he paid IHT of 60,000. So total death estate 900, out of which you pay 60,000 IHT on this death estate. Now Mr. A gifted 1,20,000 estate to Mr. X. Next paragraph, Mr. X died in 2017. So Mr. A died in 2014 and he died in 2017. So within 5 years, two deaths occur. Now having his death estate, having death estate is 700,000. And assume his full NRB is used. Full NRB is used. So now calculate the IHT of Mr. X. So, how to calculate IHT of Mr. X on his death estate in this question? So death estate is of Mr. X is 700,000. less gift to exempt party. In this question, he is not gifting to any wife, charity, political party, nothing. There is no exempt party. So all the estate is chargeable death estate, 700,000. And in this question, all nil red band is used. So you have to pay the tax IHT 40% on his death estate. 280,000 is the tax. Now this tax on the death estate is reduced by the quick succession relief. And QSR formula is equal to IHT paid by donor. And in this question, donor is Mr. A. And total death estate of Mr. A, how much IHT paid by Mr. A donor? You can calculate through an working. In this question, his death estate is 900,000. On this death estate, he pays 60,000 IHT. And he is gifting. And he is gifting 1,20,000 estate to Mr. X. So how much IHT paid on 120,000 estate? You can calculate. This one is 8,000. So in this question, QSR is equal to IHT paid by donor 8,000 divided by value of estate. So obviously 1,20,000 estate he is gifting to Mr. X into value received. How much Mr. X is receiving? 1,20,000 total estate he gift Mr. X gift minus 8,000 tax paid on this estate. So value received 1,12,000 into quick succession relief percentage. In this question, the gap between two deaths is 3 to 4 years. So 40% QSR available. So whole formula of this is equal to 2986 QSR relief, and the remaining IHT payable is 277,013. Clear? After this, the last topic, overseas IHT, I will discuss with you.